Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today's hump day, July 10th here. And we got a couple economic news releases today. We got a minor one here starting off with the wholesale inventories for the month of May. We had actually a zero point 0.2 rating for, or zero point 0.2 increase of inventories back in April, but actually they reduced it, revised and reduced it to negative zero point 0.1. So for the month of May, it reduced even further down to a negative half. Not a big one to worry about, but they just use it to kind of see if wholesale inventories are increasing for anticipated sales. So they're kind of looking at possible increase in sales. So that's kind of what they look towards as maybe future predictions on this. And then last but not least, we got the Fed minutes being released at 11 o'clock Pacific Standard Time here. And this is going to be what everybody's waiting for. So the market's going to be kind of in a flux here this morning until after that's been released, and then it'll probably take a little bit for them to decipher over the minutes, review it, and then make any decisions where the market's going to be heading from there. So all eyes are on this Fed minutes today because, as you may recall, last month when the Fed had their press release, the investors panicked and then basically they thought let's be honest, they overreacted and they basically felt that the Fed is going to taper out the QE and then maybe raise interest rates too soon, and that's where the concern lies. Where most people in the know basically are saying no, that's not the case, and they're just trying to forewarn you that this is going to be coming down the line at some point down the pike, and this may, to be prepared for it. So, but he may have, but Bernanke's probably mistake on this whole process is that he probably did it a little too soon, anticipating that the economy is going to be moving as well, or at least in predicted status, or reach the levels that he thinks it's going to reach as soon as it's going to happen. As you know, the numbers keep changing a little bit, and there's always variables that kind of interfere with it. So let's go ahead and take a look, see what the headline news are doing. And right now, stock market is actually a bit mixed. The only one that's up slightly and it's actually very light trading so far this morning, and that's NASDAQ is up slightly. And then also another note is the S&P downgraded Italy's credit rating, so that another notch in there. So that could be more money coming over towards the U.S. with the bond market as the yields are going up, and that could create more concerns later on about any defaults. So that's something obviously to keep an eye on if that might raise its ugly head again. So let's go ahead and take a look at the bond and see where we're at so far today. We didn't hold the highs yesterday. We did pull back a little bit, and today we started up higher and we're down lower. So even though it shows negative 34 is from where the start point is, but if you look at where we left off yesterday, we're only down about 19 basis points. So far this morning, the pricing's not quite as good as where we left off yesterday, but again, we're kind of testing the ceiling as well as the floor so far this morning, and that could quickly change. So after the Fed minutes, it'll be determined if this will rise, if the bond market will rise, which will bring interest rates lower, or if it'll drop and raise interest rates. So basically after 11 o'clock Pacific Standard Time, we'll probably have a better feel of where the market will go for the rest of the day. All right, stay tuned. It's going to be a very volatile day today. This could be a rough ride here. All right, folks, you guys have a wonderful day. Thanks for watching, and we'll see you guys tomorrow.